Bank reconciliation statement. This is our topic for this module, and you know the importance of this topic. Bank reconciliation statement is in fact a very popular document for the accountants. We will discuss its basic concept in this module, and then later on I will discuss with you certain other very important tips for this bank reconciliation statement. So you know very well that bank reconciliation statement is in fact a statement which is prepared to bring the balance as per cash book equal to the balance as per bank statement. Yes, here this concept should be very much clear to us that cash book is prepared by the accountant of the business entity, and the bank also maintains record of all the transactions with the business. Supposedly you are accountant of a business entity. You have maintained a bank account in XYZ bank. You will deposit cash in the bank and you will withdraw cash from the bank. Two basic transactions. And you are maintaining cash book. Yes, obviously the bank column of cash book for all these transactions that you are having with the bank. At the same time, the bank will also be maintaining a record in which the banker's accountant, the accountant for the bank, will be keeping record of all the transactions with your business. When you will be recording the deposits in the bank will also be recording this transaction as the bank accountant has received cash. You are making payment for this deposit and the bank is receiving cash for this deposit. And when you are withdrawing cash from the bank, you are receiving cash. At the same time, bank is making payment for that cash. So the accountant of the bank and accountant of the business entity both maintain records. What happens that on a specific date, let's suppose at the end of each month, accountant looks into the record maintained by the bank and tallies the balance as per bank's record with the balance as per the accountant's own record. So if both balances are equal, the accountant would be satisfied that all the transactions that the bank and the business made in this time period were recorded properly. But if there is a difference, the accountant will get disturbed and will start digging out the reason behind that difference. So the bank reconciliation is in fact a statement that gives a level of satisfaction to the accountant of the business that all the transactions made by the business with the bank have been properly recorded in the books of accounts of the business. So the business accountant, when gets to know that there is some issue, starts resolving that issue among these two balances. And remember one thing, that this is the business accountant, means as I'm telling you that just suppose yourself as business accountant will be maintaining the bank reconciliation statement as well. And bank reconciliation statement, in fact, is prepared when there is a difference between balance as per cash book and the balance as per bank statement. But remember one little thing over here. Either there is no difference between these two balances, or there is a difference between these two balances. In both cases, bank reconciliation statement should be prepared. In our upcoming topic, we will see about this bank reconciliation statement that even if both balances, means balance as per cash book and the balance as per bank statement, are equal, even then there could be some chances or there could be some reasons that can create this reconciliation differences. So there are two types of differences. One is known as adjusting difference and the second one is known as reconciling difference. So when we say adjusting difference, it means there are some mistakes in the cash book, means in the records maintained by the accountant of the business. So that accountant of the business will make certain adjustments to remove those differences. So after having done with those adjusting differences, even then the balance of the cash book which has been adjusted would not be equal to the balance as per bank statement which is provided by the bank to the accountant. So for that reason, there are few different reasons of difference which in fact known as reconciling differences. So two things you will keep in your mind, that there are two types of differences, adjusting difference and reconciling difference. So the important tips that we have to keep in our mind relating to this module are: number one, business accountant prepares cash book. Number two, bankers prepare bank statement. Bank statement. This is not the bank reconciliation statement. And the business accountant is the one who prepares bank reconciliation statement. So these are the important tips to remember.